Welcome to this video on Colorado oil and gas severance tax withholding requirements. This video will cover who is required to withhold, what oil and gas production is subject to withholding, and how the required withholding amount is calculated. In Colorado, oil and gas withholding requirements apply to every withholding agent. A withholding agent is any producer or first purchaser who disperses funds from the production of oil and gas in Colorado to interest owners. Withholding agents that are subject to these requirements include every person or business that produces or extracts oil and gas deposits in Colorado, and every first purchaser of oil and gas produced from deposits in Colorado, but only if such producer or first purchaser disperses funds to interest owners. Oil and gas production that is exempt from withholding includes gross income from certain oil and gas production based either on the type of interest owner or the production volume from the well. Withholding requirements apply regardless of whether the interest owners hold a working interest, royalty interest, production payment, or any other type of interest. Any producer or first purchaser that does not disperse funds to interest owners is not a withholding agent and is not subject to the requirements. An exemption from severance tax and withholding requirements applies to oil and gas produced from wells with average daily production below certain thresholds. The term stripper well is commonly used to refer to wells with lower levels of production, often near the end of their economically useful life. No withholding is required for oil produced from any individual well that produces 15 barrels per day or less of oil for the average of all producing days during a taxable year, or gas produced from any individual well that produces 90,000 cubic feet or less of gas per day for the average of all producing days during a taxable year. Withholding agents do not have to register the exempt production from a well with the department if the Energy and Carbon Management Commission records show exempt monthly production levels for the well. Please note that withholding is not required for any of the following interest owners: the United States of America, the state of Colorado, any political subdivision, such as cities and counties of the state of Colorado, the Southern Ute Indian Tribe, and Ute Mountain Ute Indian Tribe. The required withholding amount is equal to 1% of the gross income from oil and gas owed to each interest owner, regardless of whether such income is dispersed to the interest owner. For additional information on calculating the withholding amount, please refer to FYI Withholding 4, Colorado Oil and Gas Severance Tax Withholding Requirements. Thank you for watching this video on Colorado oil and gas withholding requirements.